Have you ever noticed that sometimes you are no longer trading? You are performing. You open the chart not because there is a clear setup, but because silence feels uncomfortable. You tell yourself you are analyzing, but deep inside, you are searching for movement, for stimulation, for proof that you are still part of the game. And slowly, without realizing it, trading stops becoming a process. It becomes emotional survival. Your eyes stay glued to every candle. Your brain keeps searching for confirmation. You open more charts, more time frames, more opinions. And the strange thing is, the more information you consume, the less clarity you actually feel. Because the problem is not always the market. Many times, the problem is the noise inside the trader. A noisy mind creates noisy trading, and a noisy trader begins seeing opportunities everywhere. A random breakout, a weak pullback, a candle that might continue. At first you hesitate, but after staring at charts long enough, your brain starts convincing you that something must be happening. And that is where overtrading quietly begins. Not from greed, not even from lack of knowledge, but from discomfort. The discomfort of doing nothing. Most traders do not realize how addicted they are to activity. When the market is quiet, they feel restless. When nothing moves, they feel behind. And when other traders start posting profits online, the pressure becomes even stronger. You open Telegram, Discord, Twitter. You see screenshots everywhere. Plus 80 pips. Perfect entry. Big breakout. And suddenly, your calmness disappears. Now your brain starts whispering, maybe I missed it. Maybe I should enter too. Maybe I'm too slow. This is how many traders slowly stop following their own system. They begin trading somebody else's rhythm. And that is dangerous. Because every trader has a different rhythm. Some traders only need a few trades each month. Some traders only trade London Open. Some traders only wait for very specific conditions. But comparison destroys patience. Comparison creates emotional pressure, and emotional pressure creates unnecessary trades. A calm trader can skip a move and stay emotionally stable. An emotional trader skips a move and feels personal pain. That pain creates impulsive decisions. Suddenly the trader starts forcing setups, opening smaller time frames, searching for more reasons to enter, changing rules in real time. And eventually, the trade is no longer based on clarity. It is based on emotional discomfort. This is one of the biggest psychological traps in trading. Most people think overtrading comes from greed, but often it comes from the inability to tolerate silence. Because silence forces you to face yourself. No stimulation, no excitement, no dopamine. Just you and your own thoughts. And many traders are not prepared for that. So they click again and again. Not because the setup is truly good, but because action temporarily removes discomfort. The strange thing is, professional traders often look inactive. Sometimes they do almost nothing. They open charts, observe for a while, then close everything and walk away. No forced setups, no emotional entries, no need to participate in every movement. At first, this behavior looks strange, but experienced traders understand something most beginners learn too late. Not every market deserves risk, and not every day deserves participation. Some market days are clean, clear structure, strong momentum, real direction. But other days are only noise, fake breakouts, weak momentum, random movement, messy price action, and trying to force money from those conditions slowly destroys discipline. Many accounts do not die from one huge mistake. They die from hundreds of small emotional decisions. One unnecessary trade, then another, until discipline slowly disappears. And what makes this even more dangerous is that sometimes bad trades still win, and those random wins strengthen bad habits. The trader starts believing, maybe this setup was actually good. Maybe I should trust my instinct more. But many times, it was not skill, only randomness. That is why selective trading is so important. Selective trading means filtering aggressively, not looking for reasons to enter, looking for reasons not to enter. That changes everything. Because trading is not a game of finding more trades. Trading is a game of eliminating unnecessary trades. A beginner sees opportunity everywhere. An experienced trader sees filters. And this is where trading psychology becomes deeper, because after some time, you begin noticing something uncomfortable. You are no longer trading only for money, you are trading for identity. To feel productive, to feel smart, to feel involved, to feel like a trader. And this creates another dangerous trap. The trader mask. The need to appear confident. The need to always have an opinion. The need to look certain. So traders start posting only winning trades, hiding mistakes, pretending to feel calm, pretending to know exactly where price will go. But internally, many of them are exhausted. Because once you become emotionally attached to being right, you become emotionally unable to accept being wrong. And traders who cannot accept being wrong become dangerous to themselves. They move stop losses, add to losing positions, revenge trade, refuse to exit bad trades, not because of strategy, because of ego, because every loss feels personal. But the market is not personal. The market is not judging you. It is not attacking you. It is not testing your worth. It is only moving. Price goes up. Price goes down. That movement is not a statement about your value as a person, but emotional traders make everything personal. A win means, I am smart. A loss means, I am failing. And this emotional attachment destroys consistency, because now every trade carries emotional weight, and emotional weight creates pressure. Pressure to recover, pressure to prove yourself, pressure to participate, pressure to always be right. This is why many traders feel exhausted, even when they barely made money. Because overtrading is not only financial damage, it is psychological damage. Every trade consumes focus, discipline, emotional energy, patience, decision-making power. And after enough unnecessary trades, the brain becomes noisy. When the brain becomes noisy, everything starts looking like opportunity. This is why experienced traders often trade less. Not because they are lazy, not because they are afraid, because they understand timing. A professional sniper does not shoot constantly. A hunter does not chase every movement in the forest. They wait, patiently, calmly, for the right moment. Trading is exactly the same. Most money in trading usually comes from a very small number of high-quality setups, not from constant activity, not from emotional participation, not from reacting to every candle. And ironically, when traders reduce the number of trades, their results often improve, because they finally remove boredom trades, revenge trades, random entries, emotional setups, low-quality decisions. The account becomes calmer, and the trader becomes calmer too. That is the real power of selective trading, not only protecting money, protecting mental clarity. There is another trap traders rarely notice. The illusion of productivity. A trader spends 10 hours in front of the charts, watching every candle, checking every notification, redrawing levels, switching indicators, scrolling social media, and at the end of the day, there was never a real setup. But emotionally, the trader feels productive, because activity creates the illusion of progress. Yet trading is one of the few professions where doing less can actually produce better results. The market does not reward effort. It rewards timing, and timing requires patience. That is why trading is emotionally difficult for modern people. We are trained to constantly react, constant stimulation, constant movement, constant scrolling, constant noise. But trading punishes emotional impulsiveness. The more reactive you become, the less clearly you see. And this is why many traders slowly become addicted to chart checking. You close the charts. 5 minutes later, you open them again. Nothing changed, but emotionally you feel the need to look. You want movement, you want certainty, you want something to happen. And the market quietly becomes an emotional dependency. At some point, a mature trader begins understanding something important. The market is not a place to escape emotional discomfort. The market is a place that exposes emotional discomfort. If you are impatient, the market amplifies impatience. If you are fearful, the market amplifies fear. If you are emotionally unstable, The market amplifies instability, and if you constantly need stimulation, every candle starts looking like opportunity. This is why many traders lose control after losses. They do not actually want another setup. They want emotional relief. After a stop loss, the next trade becomes emotional. Now the trader is no longer asking, "Is this a high-quality setup?" Now the trader is asking, "How do I recover this feeling?" That is revenge trading. Not revenge against the market, revenge against emotional pain. And emotional pain creates emotional decisions. This is why selective trading changes psychology completely, because selective trading forces you to slow down, to observe, to question yourself honestly. Do I really need this trade? Not, can I trade? But should I trade? That is a very different mindset. Professional traders understand something important. The market will always exist. There will always be another setup, another breakout, another trend, another opportunity. But if your psychology becomes damaged, you will not be ready when the real opportunity arrives. That is why protecting mental clarity is just as important as protecting capital. At some point, something begins changing inside the trader. You stop needing the market to prove something about you. You stop needing constant action. You stop needing every move. You stop feeling destroyed when the market runs without you. And for the first time, you begin trading from clarity instead of emotional hunger. That does not mean emotions disappear. Fear still appears. FOMO still appears. Impatience still appears. But now, you notice those emotions before reacting to them. And that small pause changes everything. Because inside that pause, discipline finally has space to exist. Real discipline is quiet. Real discipline is closing the chart when there is no setup. Real discipline is skipping bad market conditions. Real discipline is accepting that doing nothing is sometimes the highest quality decision. Most people do not understand this. In modern culture, constant action looks productive, but trading does not reward activity. Trading rewards timing, and timing requires patience. The strange thing is, the best traders often look boring from the outside. Less trades, less emotion, less noise, less drama. But internally, their process becomes stronger and stronger because they no longer react to every movement. They choose carefully. They wait. They filter. They act only when probability truly stands on their side. And slowly, trading becomes simpler. Not easy, but simple. Wait. Observe. Filter. Act. Leave. No emotional chasing. No need to prove anything. No need to participate in every move. Only clear decisions, clear risk, clear structure, and a calm mind. Maybe that is the real meaning behind trade less, not laziness, not fear, not weakness, but emotional maturity. The ability to stay calm while the world keeps reacting. The ability to let opportunities pass without emotional pain. The ability to protect your mind, not only your account. Because in the end, the traders who survive the longest are usually not the traders doing the most. They are the traders who learned when not to trade.